DTM, what is going on, everyone? I hope you're well and doing great on this Thursday. Getting ready here for our live session together. Good morning, good afternoon, good evening, wherever you are in the world. I am so glad that you are here to do what we do best, and that is put in the work and stay on the right side of the markets. Speaking of which, FNGU, absolutely insanity. A lot of people out there are having a really difficult time staying on the right side. There's no question about that. A lot of people in their own heads, a lot of people just not positioned correctly. Having a mechanical edge, knowing when to be in the markets, when to be out. By the way, we're out of the markets in Bitcoin. This is going on 12 days now. Out of the market on Ethereum, going on 12 days, waiting for the signal. Cardano did not like yesterday's price action, and it took out its short. It closed for a loss, roughly 2.5%, coming off another loss over here, about 1.5%, but doing what it's designed to do, and that's let go of losing trades, cutting your losers short and pushing your winners. Now, if yesterday you FOMO'd into yesterday's price action, if you are, I'm talking about crypto here, right now, obviously, this called for letting go of a short. Ethereum, momentum, is that to the upside? No, it's not. Now, if you zoom out a little bit, it certainly is. If I zoom out, I could say that, well, in 2023, we definitely still have a big move to the upside. Momentum's to the upside, and we are a lot closer to attacking the long side than the short side. This is the 8-hour time frame, and the same exact stands for Bitcoin 2023. We are in nice momentum to the upside, but you could see that is rolling over. We're in a pullback at this particular point in time. We were just cautioning that we could be setting up for a pullback. We're now in a pullback, and we've gotten ourselves position neutral on that. Out of the market, waiting, still much closer to attacking on the upside if that momentum kicks and returns to the upside than the downside. We're not close to attacking on the short side. FNGU, absolutely insane. A lot of people right now, look at this beauty though. NASDAQ over here looking to put in the third repair of the year. We have the breakout of the bear market trend line right over here. A lot of people thought that that was going to completely roll right over. We then broke out above the purple line. This has become very hard to maneuver. In my opinion, the trigger for the sell impulse has not been breached or even touched. Out of Michelle's bull flag over here, we're able to see that price now breaking out, retesting, and now looks like it is blasting off. Is that a bit of a buy the rumor, sell the news, setting up for the resolution of the debt ceiling, which should be just within the next couple of weeks? There are reports it could come as soon as next week. That seems to be verbal positioning. Usually it goes down to the wire. What happens afterwards? By the way, for this repair to be put into the place, that's a big one. Let me zoom out for a second and show you what's going on. Let me zoom out and just show you that's a big and nice repair, taking out the August high. You could see in January that was then support. It then broke, confirmed into resistance. We broke above it again. Do you remember that March 2022, that sharp move up? And then you could see that little test and then came back through. Since then has been resistance. Price needs to close today above that for a confirmed repair. And then you could see with that awareness that, well, we're also coming into a bit of resistance. Even on that breakout, you're coming into a little bit of resistance. A lot of people, is this actually a trap? I don't know. Here's the thing, and this is probably the most important. Let me put on the focus here. We got alerts kicking off, and I don't mean to turn to this, but here we are. Wall Street fears. We're seeing this is coming from Bloomberg now. This is coming from a let's say, I wanted to say like a popular, a normal news outlet. They are now talking about the aftershock from the debt deal. Treasury to replenish coffers via new issuances. Sorry about that. Let me try to get that on to do not disturb. And then we're looking at that new issuances in order for the US Treasury to go ahead and rebuild their cash account, which has been drained ever since January. We are looking that we could be draining liquidity from the system, hurting riskier assets. It's worth talking about in so much as that on this move up that we're seeing on equities, we are not seeing at the moment crypto participating. We've been looking at Bitcoin. We've been looking at Bitcoin in a pullback, right? Now, look, you got to be able to, and this is very important, critical skills, critical thinking is of utmost importance in the world more than ever today. And a lot of people really lack in this area. They hear one thing and it sets off emotional responses if it's different from whatever position they hold. And when I say position, I don't mean where your capital is allocated. I just mean whatever beliefs you may hold. And if you hear something contrary to it, you've been programmed to like have an emotional response to it. When we're talking about this potential bearish structure that's forming, for this to trigger, we need to take out this low over here. That would be the resumption down, and that would be turning from just a pullback into potentially something deeper. At the same time, we're well aware of this line that I'm highlighting. A breakout above, that's a resumption back towards the trend. Not only is it a resumption back towards the trend, you're going to see CTM 2.0 picking up long trades again, almost exactly on that trend line break I just showed you. You're going to see Ethereum picking up long trades again, and Cardano likely will stay out of the market. Well, not too far. Cardano's lagging a little, not lagging. Cardano's actually picking up. We just talked about riskier assets could feel that liquidity crunch. Cardano seems to me to be, acting appropriate. If you zoom out, you can see in 2022, simply no long entries on Cardano. It's a bear market. Cardano right now is an altcoin, and you have to wonder where that speculation is going. Yesterday, we talked about people talking about they're looking for Bitcoin to reach new all-time highs in 2023. We were like, well, where's all that liquidity going to come from? Outside of the Federal Reserve, outside of central banks across the world looking to strongly pivot their current policy and inject a flood of money into the systems, what is going to cause Bitcoin to go to a $2 trillion market cap in the next 6 months? Highly unlikely without something major happening. Now, maybe you see something like a US default. I would imagine the odds of that happening are extraordinarily small, but they're not zero. If that were to happen, I cannot see any other choice but the Fed to come in. And at that point, the system is going to be blowing up and do whatever it can to backstop it. Outside of that, and again, the probability of that, I do believe, is quite small. I can't imagine what could cause it to happen. Yeah, FNGU, absolutely massive. Let's just bring it up for a second. And a lot of people in CTM, it was just at the beginning of 2023, CTM 2.0 solutions introduced for the stock market, Tesla, the T and S triple Q, and FNGU and the inverse FNGD. And since then, FNGU, following the massive move that you're seeing in the NASDAQ on the tech, and again, having a mechanical edge, it is absolutely such a strong weapon. 100%. A lot of people, because of the uncertainty in the United States with crypto, brokers specifically, FTX collapsing, a lot of people put a large part of their funds out of crypto and into the public markets, into the stock market, specifically FNGU. The timing has been enormous. In 2023, just since that, 100% holding an open position 18%. Now, don't FOMO. What do I mean by don't FOMO? Well, you can't chase. And that includes how you're executing in the market, even through a mechanical system. If you're looking at, for example, in 2022, on the tail end, the last quarter, Cardano was just cruising to new all-time account highs. And Bitcoin and Ethereum spent the fourth quarter running sideways. It wasn't until the beginning of 2023 they started making new all-time highs. If you would have taken your capital out and followed and chased into Cardano, that would have proven to be a very poor decision. It's why we talked about that capital allocation. If you did not get a chance to go into, and I bring this up because we just had MD upload a bunch of new nuggets. CTM, frequently asked questions, tips, mindset. If you have not had the chance to watch these, I can't imagine a better, more productive way to spend your time and or watch them over and over. If you were FOMOing yesterday, even though CTM 2.0 had you positioned on the sidelines and you were FOMOing on a price spike of 1% into crypto, buying the top, your time would be much more better spent off over here. One of the awesome videos in here is the allocation, right? So I'm just jumping up, trying to find it. And I don't know. But one of the best videos over here is what is the best portfolio allocation. If you have not seen that, you will get an extraordinary look at the team here, at the Hive Mind Collective Collaboration and the work that we do. Highly recommend that. We're looking, by the way, today at a new expectations for the June meeting continue to rise. Now, we have a lot of data between now and the June meeting, including jobs reports, including another CPI report, and this is subject to change and the data. But the Fed speakers this week, and Monday we talked about this week was full of Fed speakers. Tomorrow we got Jerome Powell, J-Pow, bringing in the heat. And they've been talking about that they still need to get ahead of inflation. They don't think that they're there yet. And you can see that these expectations are coming up in response to that. Now, let me jump back over here. Let me close this out. Let me jump back over to here. FNGU has been an absolute beast like nothing else. At the same time, do not chase. That includes into whatever strategy is performing best at the moment. And also don't forget, if we start seeing some downside action, and then we see the inverse start kicking off to the upside. At that point in time, you want to be looking at boom, ba-dum, bum, bum. That's more of a hedge, in my opinion. We've looked at, like, for example, the last 3 years' performance, why it did extremely well in 2022. It's on the upside where the gains come from. Put them both together, the compounding is absolutely beautiful. Yeah. I mean, BlockFi, they went bankrupt. If you remember, Mr. Singh, some people were able to decide what is signal and other people were not. Those that following CTM were able to see when we had this breakdown. It was a very important breakdown, very bullish. I'm going to go to log scale 1 second, or I should say that I was very bullish about my upside expectations. I had no idea things like brokers like FTX were selling Bitcoin that didn't have, suppressing price. I had no idea that the response to the Fed's pivot towards pulling away their easing, the quantitative easing, and tapering it down was going to have such a quick reaction to risk. I was looking for wave 1 into wave 2, and then for the move into the blow off top. However, when price broke down 53,140, if you go, those videos were included on the public end, even though that we were private, because it was such an important breakdown. And at the same time, obviously posted on Twitter. And at that particular time, it was like as loud as can be. You have to de-risk down. That included, if you had any loans out on BlockFi, paying them off, de-risking down. Exact verbiage and warning used. Mr. Singh, you have to be able to discern what is signal, what is noise, and you can't like half go at it. You can't just like pick up a thing here, it takes constant work. The markets are incredibly difficult. Takes constant work, effort, and dedication. Otherwise, you get left behind. But that's completely up to you and, you know, what kind of effort and commitment you're going to make. You have to be able to discern what is signal, and then you have to go ahead and stick to it. So let me try to go to do not disturb. There we go. All right. So Bitcoin, Ethereum, Cardano, all on the sidelines over here. Do you see, or I see that it looks to me on this move up that we've been seeing in the equity markets, and that crypto's just not participating. Now, either crypto is lagging or actually crypto is leading. When it comes to liquidity, it's fair to say that usually crypto leads. So if you are following the liquidity, and the way that we look at it, two different ways, we could see that global liquidity, this is the balance sheet of the Federal Reserve, the ECB, China, and Japan. Japan, right, by the way, right now, pulling away liquidity. And you could see that global liquidity is going this way, right? We look at this also including the US Treasury cash balance and the reverse repo, and liquidity is going this way. It appears to me that what we're seeing is actually crypto, who's currently pulling back, right, is actually, I'm trying to look for a good chart. Well, this is our chart. And I just want to point out a couple of things. That this red line over here, this red line that I'm highlighting, that is where we're looking for current short position discretionary trading, counter trend trade. We are currently in an uptrend. You know, from CTM 2.0 positioning, we are simply on the sidelines, and the DXY for sure is the cause of all of that. And that, I'll come back to that 1 second. That's a nice point out over there. That would be a stop loss. Price coming above this red line, that would be from this entry here, a place to get out of the market, keep your losses short. A price breaking about the outer line over here, that's a resumption back, igniting a resumption back towards the trend. We got resistance above from the green line, the red line, this lower green line, and then also that yellow line is currently all resistance. And then also you have that 29,000 resistance area that we just saw playing into the market. So a bunch of resistance to work through. Price currently just pulling back. It's a mere pullback for ants as far as Bitcoin is concerned in a bull market. But if we do see a breakdown at that point in time, it could be a big moment for Bitcoin. The DXY has been something to for sure talk about. And we did talk about it, but we talked about it very early. We were able to, not looking at this, by the way, that would have worked out. But see this trend line break over here, this buy impulse, I'm highlighting the trend line. At that point in time, we stood aside and stood neutral, and we wanted further confirmation. It was coming first from a trend line like this, and we continued to develop that position and wait for it, finally waiting for the breakout all the way up here. And that was very, very, very well done. A lot of people at that time obviously looking for the breakdown and the dollar to be done. And this is for sure the cause of global liquidity on its way down right now. US dollar, could it be headed towards, I'm going to move this up over here. I got onto log. Let me get off there. Could it be headed towards 106? It could be. And that would be just an area of resistance broken above there. That would be a whole new dynamic to think or talk about. Is it too soon to be looking for any type of fade of this? Where would this break down? I think it's too soon to be looking for the breakdown right now. So you saw look horizontal line, a breakout of the descending trend line, downward sloping trend line, breakout, retest, resumption, stop loss to break even, and just let it run for now. We've seen other periods. It's a good question, but we've seen periods where, for example, one period that I want to point out is right over here. And this is the beginning of 2020. And here you have the dollar rising and aggressively and strongly. In this particular period, it's like a 3-month period, 2.5 period. You also see for this 2-month period, gold rising. And then during this 2-month period, you also see equities rising. So let's see if we could just bring that up really quick and we can find out. So I showed the dollar rising during that period, right? That was the beginning of 2020. And you could see that equities, why the dollar was rising, was it outperforming the dollar. But here you go. This is 2020. And during those 2 months, as the dollar was rising, equities definitely outperformed, as did gold. So now, do you like that? What that led to was not a good outcome. So is that a warning sign? I don't know. I don't know if it is or it isn't. The warning sign that I see is looking at global liquidity, and I'm saying to myself, well, right now, as soon as this debt ceiling deal is reached, the market then is going to go from a point of like this move up, saying, all right, everything's going to be all right, to realizing, whoa, now the Fed is not only continuing to run off their balance sheet, a June hike is in play. And not only that, we're also looking at, the US Treasury needs to pull liquidity away from the market as well. And if we could get through the rest of the year and continue to see the markets just continue to fight all this off, I would be very surprised. And at the same time, that would be extraordinarily impressive. And then to bring it even forward, realizing how difficult it is to be able to maneuver. I cannot. By the way, if you're here and you have not yet hit the like button, let's get up to it. We got 101 people in here with 28 likes. Go ahead and hit that like button, get us going, and appreciate the support for the work and for the channel. A lot of you've been leaving a lot of comments over there. I am grateful for it on the replay. TQQQ finally here after mostly break even of 2023, holding an open position and a nice one at that. And then what else are we looking at? Gold I want to speak about today because gold is currently not able to find the breakout above the cup and handle and pulling back. So let's look a little deeper at that because that might be offering a bit of opportunity. This is what we should have been focused on a lot more than just the swing trade. We did get this swing trade entry and then exit on gold. However, a little bit further zoomed out perspective would have been finally welcomed. Let's put it that way. We're looking at a potential breakdown into that resistance of that cup and handle. Has the structure changed? I'm going to go ahead and draw in a nice simple trend line. And as long as we remain above that trend line, I don't think that we have any type of breakdown, sell impulse triggering in the market. And this might be offering an opportunity here to developing, come down off the 3-day down to a daily time frame. and then it's going to go down to an 8-hour time frame. And I think that we could be looking also at this particular time at what a buy impulse would be. That's a very aggressive angle, but I think that coming into the support over here, able to go ahead, and if we hit a buy impulse, I think I'm going to do this though. We're going to make it a little safer. Keep an eye on that one together. All right. Thanks, Troy. Appreciate that very much. All right, so we're looking at here today. Obviously, yields are up, and the 10 years also worth talking about today, in so much that if I were to look at this chart and not know what instrument it is, I mean, it looks quite bullish to me, and I would say that that looks like it is consolidating in a potential resumption pattern. Now, could it be that the market has the Fed's that the market's expectations for what the Fed and the Fed funds is totally off? I don't know. I see mixed messaging coming from the Fed speakers. I see like this week a lot of talk about we're not there yet, and at the same time that's complemented with talk about, well, we plan on keeping rates elevated for longer. So there's no doubt that the pause is being set up. We could have seen the last rate hike last month, but June is definitely a live meeting. If I throw in some TA, you could see that, well, we continue in this channel, right? And now we're breaking above the center of it, and we could be heading towards 3.85, 3.9. And I'm not sure how well positioned the markets would be for that. I don't think that we would get a breakout of that to the upside. If we do, we'd have to stay in front of it. And I think that as we continue consolidating right now, that we are potentially headed towards the upper end of that channel. And I'm not sure how risk is going to handle that. I feel, and I just want to continue to check my bias. I wonder if I am overly cautious on the markets in the second half. I ask myself that question regularly. At the same time, I don't use CTM 2.0 as a crutch. I use it for the enormous edge that it is. I feel confident that I'll be able to be kept on the right side, whether or not that's through crypto or whether or not that is through any type of stocks and or ETFs or ETNs. And that's, well, the daily, we didn't look at the daily. And the daily here is a little interesting. Bitcoin now is closer to actually entering on the long side than the short side. We see Ethereum still holding that open short. It has gone nowhere. Price has gone nowhere these last few days. Still currently 5% into profit, and Cardano is out on the sidelines. So I think that our cautious attitude over here has paid off well. That changes if we break out to the upside. Not only will you see our positioning as far as CTM 2.0 kick off on the buy side, but discretionary, we will be extremely bullish over here, looking for a move, and that move probably targeting around 34,000. That would be the expectations for that move up. I think that's it for today's session. There was actually yesterday, big shout out Phoenix Fire. After our session, I had a meetup, and I was really pleasantly impressed with the complementary work to CTM 2.0 that you were taking a look at. Tomorrow, we have the Summit team meeting. I will be first introducing and mentioning what you covered, and then sharing the video with them. And that way we could get some of the CTM collective hive mind into working in on that. That was really beautiful. And CTM continues to impress in so many ways. You know what? We're a little bit early today. This is a light session, and that's good. It's okay to have nothing else to talk about, right? We are continuing to be. If you are over trading, if you're forcing trades, you don't belong doing that. This is going on 12 days now. CTM 2.0 is out of the market. If there's anything else that we want to open this up to and talk about, I enjoy that immensely. I'm going to go ahead and see if we have any other questions. Otherwise, Jeff, we'll cut it short. I got a lot of prep work to do for tomorrow's summit team meeting. And, that's it. Cheerio. I love it, Omicron. That's right. Listen, I'm going to, since there's no reason to keep going if everything is covered and we're completely on autopilot. Oh, the S&P 500. We didn't get the chance to check that. Let's take a look at that in S&P 500, why the NASDAQ is breaking above horizontal resistance. It's currently just into resistance right now. And interesting enough, though, you could see that if I bring this line down, this line comes off of, for example, right? I'm off of log. Hold on one second. Got to get back on log. This line, you could see that I'm moving around over here. It's a very light line. You could see the symmetry of the market and how it's found it all throughout. You could see that if I place this off of this last high right over here, that price right now, why has only been small touches into it, this is where price is currently finding the high thus far this session. That's it. That's where we are today, everyone. Thanks for putting the work in with me. Thanks for being here. Everyone, lots of love. Loving FNGUE. And I'll see you tomorrow.